All right, let's jump right in. We're going to tackle one of the most important ideas from the simple path to wealth, all those dangerous myths and shiny distractions that can totally pull you off course. This whole explainer is about sweeping that stuff away so you can see the clear, simple path forward.
So let's kick things off with a pretty big question. I want you to really think about your own investment strategy for a second. Is it possible that some of these super tempting, really exciting ideas, these magic beans, are actually the very things holding you back from building real, long-lasting wealth?
You know, the author has a great name for these distractions, magic beans, and it's perfect, right? Just like in the fairy tale, they're these tempting promises of amazing overnight riches. But, as we're about to see, they're almost always a huge distraction from the stuff that actually works. So let's be super clear about what we mean by that. Magic beans aren't just, bad ideas. They are dangerous. Why? Because they lure you away from a simple, proven strategy that we know works time and time again. So if these magic beans are the villain, who's our hero? Well, it's this guy, Jack Bogle. He founded Vanguard, and he really championed this revolutionary, super simple idea, the low-cost index fund. So what is that? It just means you buy a tiny slice of the entire stock market. Your success isn't tied to some lottery ticket company, it's tied to the economy as a whole. And Bogle proved with mountains of data that this approach almost always wins. Get this, over most 15-year periods, over 90% of those expensive, actively managed funds fail to beat a simple index fund. So the point isn't just that simplicity is easier, it's actually way more effective.
Okay, so let's get into our first and probably the biggest magic bean out there. This idea that you or I can consistently pick winning stocks. I mean, it's the ultimate investing fantasy, right? But the reality, well, it's a whole different story. This needle in a haystack analogy is just perfect. It's not that finding a winner is just hard. It's that the odds are just massively stacked against you. Seriously, think about it. Even the pros on Wall Street, with all their computers and research teams, can't do it consistently. So for the rest of us, it's pretty much a fool's errand. And I love this quote from the book. The author's take on it is, well, pretty blunt. It's not just a bad idea, it's dangerous horse hockey. And dangerous is the key word there. Why? Because it tricks you into thinking you're in control when you're not. And that leads to some really costly mistakes. All right, on to our next magic bean. And this one is so seductive. It's the idea that you can outsmart everyone by jumping into the market at the perfect time and jumping out right before a crash. But here's the trap. Waiting for that perfect moment usually means you miss the boat completely. Now, this next point might rub some people the wrong way. A really common strategy you hear about is dollar cost averaging, dripping your money in slowly. But the author argues that's just a sneaky form of market timing. By keeping cash on the sidelines, you're basically betting that the market's about to go down. And if you look at history, the market tends to go up. So more often than not, the best move is to just get your money invested as soon as you have it, giving it the most time to work for you. Okay, we've been talking about myths and bad strategies, but now we're shifting gears to something much darker. Outright scams and cons. This isn't about making a bad investment choice anymore. This is about people who are actively trying to steal your money. And here is a hard truth you just have to accept. It doesn't matter how smart you are. In fact, and this is so important, thinking you're too smart to be fooled makes you the perfect target. That overconfidence is exactly what con artists are looking for. Nobody is immune to this. So how do you defend yourself? These 3 golden rules are your shield. First, be skeptical. If a return sounds unbelievable, that's because it is. Period. End of story. Second, remember that con artists look trustworthy. That's their entire job. They are masters of disguise. And third, and this is the trickiest one, the best lies are always mixed with a little bit of truth. That's what makes them so believable. So after all these warnings about myths and traps and cons, you might be wondering, what's the solution? How do you protect yourself from all this noise? Well, the answer, maybe surprisingly, is just simplicity. And this is really where the rubber meets the road. A simple portfolio of low-cost index funds isn't just about making your life easier. It's really a gift to your family. If anything ever happens to you, you're not leaving them a complicated mess. You're leaving behind a straightforward plan that they can actually manage without getting taken advantage of by some expensive expert. So here's the big takeaway. Simplicity isn't about settling for less. It's about building a powerful shield around your wealth. It gives you security, it gives you peace of mind, and it creates a lasting legacy for the people you care about most. You see, when you learn to avoid all the magic beans, the stock picking, the market timing, the outright cons, the path to building wealth becomes surprisingly clear and simple. So, with all those dangerous distractions out of the way, the real question becomes, what's waiting for you at the finish line? What does that freedom actually look like?